What is good, everybody, and welcome back to a Charts and Capital exclusive video. Today we're going to be taking a look at 5 of the most undervalued stocks that I personally am adding into my portfolio. I know a lot of people struggle with finding stocks, figuring out what stocks to buy, what stocks to sell, what stocks to hold. So I figured I would give you exactly that: what stocks to buy, what stocks to hold, and sort of when to sell them. Just remember, this video is strictly for educational purposes only, and I just want to see all of us make money without being sued. So with that being said, let's jump straight into this, starting off with a fairly new stock that just IPO'd back in March 2024, which is Reddit. So let's take a quick look into Reddit. Now, you guys are going to notice a trend here, and I'm using the exact same model to find undervalued stocks. I simply am drawing out my primary trend, my secondary trend, and I'm essentially figuring out where the liquidity lies. A common theme on this channel is I strictly trade via open liquidity. And in this case right here, there's a lot of money. There's a lot of money sitting all within here on Reddit. Reddit shorted, what percent is this out of curiosity? 60% maybe? 50%? 65%. We came in and filled this gap, which is a point of interest for me. And ultimately, we ended up trading out of here. So I called Reddit longs at about $100, so we're up 57 or so percent. And overall, this stock just has a lot of liquidity sitting within here. It's an IPO'd stock. There's not really much history I can backtest on. I kind of just have to go with what I see. And in this case, very simply put, we're just following the trend. We are just, yeah, technically this is broken, but the trend is still intact. Whether or not one trend line breaks and we stay within the general trend doesn't really matter. This trend is intact still. So we came in and filled this gap, and now we just have so much open liquidity left. If you guys were to become a buyer from here, you'd be looking at 47% to all-time highs. Many people are probably like, let's go and wait to fill this gap. That's if that ever happens, and banking on what-ifs are not good ideas. I personally would not bank on what-ifs. I would start scaling in from now and take that risk. That's just me, though. So personally, I think Reddit is still a very, very undervalued purchase right now. Once we hit all-time highs, we'll see. But for now, Reddit looks like a 47% gains from current price. The next stock that I want to look at is Adobe. Now, this is one of those ones where we do have that history of growth. And if I were to just zoom out, you guys can easily see it. Back in 1987, we had this dip, which is essentially going to turn into this big channel in current day. And since the stock has a history of growth, I know we're resilient. I know Adobe's learned to roll with the punches. And overall, it's not something that I necessarily have to worry about because we've fallen, I'm going to guess this is around the same as Reddit, 60%. 43% to current day and 60% at the trough of that last pullback. But overall, Reddit has shown me we're very resilient. We tend to grow, and even when technology is not as advanced as it is in current day, Reddit was still on an upwards trajectory, or Adobe was still on an upwards trajectory. So for me, still very undervalued, still very undervalued. Personally, I see a ton of liquidity sitting within here. A lot of people are going to view this level right here as support, which technically it is. But to me, I think in the grand scheme of things, we come and play off of the long-term support that is right down here. That's just what I think. I think we get another entry over here. And if this does happen, I think we break past it ever so slightly and potentially play once again into this long-term trend. As the last time we did this was back in 2011, post, oh no, this is 2008, the global financial crisis. Oops. So I guess we had another pullback. But this is 14 years in the making where we have not had a pullback hitting into this long-term trend. So personally, I think it's definitely possible. So if I'm you guys, I'm scaling in on Adobe once price hits that 300 range, that 275 range, and I'm looking to take this into 225-ish, potentially even 170, 175. We'll see about all that though. Overall, I can see liquidity being taken from here at these lows, these equal lows, and price trading into the median line once again. Adobe is definitely one of those. Oh, why didn't you get drawn out? It's one of those trickier ones because it just looks like a downtrend and ugly price action to the naked eye at least. But to my primary imbalance model, I can clearly see primary trend, secondary trend form, which means there's money all within here. So there's money trapped all here. Now, if that is the case and Adobe does decide to go lower, you're probably looking at a scenario like this. Boom, very slightly breakthrough support. And then we accumulate off the lows. That's potentially what we might see. And then out in 2027, 2028, whenever it is, we might potentially hit off of this median line once again. Meaning this should be about, let's go straight from the bottom of the support just to be fair. 300% gains in 3.5, 2 years, 3 years, however long it takes. So personally, that's pretty good returns for me. So I'd be holding it into that 1,050 range. And if Adobe, for some reason, splits its stock price, just draw out the same trend and hold it back into the median line is really all I can say there. So yeah, in a nutshell, that is Adobe for you. The next stock that I want to look at is a big boy. It's a big boy. And that is Apple. I'm going to follow the exact same method that I just used on Adobe since Apple does have that history of growth. And I'm going to zoom all the way out and draw out my long-term channel. And mind you, I am on logarithmic. This looks way different on a regular. I cannot do this if price is just in regular scale. So I keep all of my charts in logarithmic. And I believe, let's see what price it's at. Okay, that gets broken. Not from there. Not really too valid. Is it this? What year is this? 2018. This is pretty clean. But this is cleaner. This is way cleaner. Yeah. I think this... Can I extend this? I absolutely can. Hmm. 3-2. All right, so the next stock that I want to take a look at is Apple. Now, right now, Apple looks like it's just trading in a downtrend. Again, to the naked eye, that's exactly what it looks like. But to me, same exact model. Primary trend, secondary trend, bada boom, bada bing, imbalance. So when I zoom out on Apple, the one thing that I want to do is I want to draw out my channel just to see exactly where we are. And if I had to take a guess, we're still undervalued. There you go. There is your channel stemming from, what year is this? 2008. Can I be fair and draw this straight to the bottom? I absolutely can. Okay. So in a nutshell, Apple looks like it just came very close to being extremely undervalued. We obviously hit off of this. I believe this is the 50 or one of the EMAs. And overall, it looks like we found support down here. Right over here. Apple tends to have the tendency to trade into support levels and very swiftly break them. But in this case, it doesn't look like we're doing that. Looks like we just had one pretty harsh dip that got bought up. Apple's a very sought after stock, and if people find it undervalued, you better bet your bottom dollar they're going to buy it. Why do I keep doing that? So right now, same exact thing. Primary trend, secondary trend, imbalance left between. And it looks like we actually have a long-term accumulative pattern. You can see it here, actually. Where can you see it? Here. Here. This is technically not a head and shoulders, but it sort of represents one. And here is where all of that liquidity lies on Apple. All within here. All within there. So technically Apple looks like it might be headed towards $300, around that, which would be about 40% gains. What is it from here? Apple tends to do these 100%ers. So where's 100% from down here? Straight into that median line at about 350. So you can expect something like this to happen on Apple, where we trade out of this level and potentially hit the median line, sort of like Adobe. What percent is this? Or sorry, what Fibonacci level? Chef's kiss. So we hit off of that damn near perfectly. But 103% if you manage to catch the bottom of that. Very unrealistic, but from current price, that's still 63%. Not bad. Not bad at all. So Apple definitely looks like we'd be taking that right into that 330 range, and would yield you about 60 or so percent, at least from current price, if the market doesn't decide to gap up next week. So Apple definitely still undervalued. Definitely. Absolutely. The next stock that I want to look at is Coinbase. This one might spark some controversy because we're damn near at all-time highs. How can we still be undervalued? I love that question. Absolutely love it. Any asset, any stock, any cryptocurrency, does not matter what it is that I show you guys, the liquidity normally is going to be in this U-shaped pattern. Why is that? Well, you find resistance here, 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 sure. But this trend just keeps going up. So, yes, there's money trapped all within here. But eventually, we'll find resistance again. It's as simple as that. Eventually, we will find resistance again. So, to me, Coinbase looks like we are going to fucking soar. Where to, I have no clue. But we look like we are going to soar. There is money trapped all within here. All within here. And as soon as investors see prices hit all-time highs, people flock to something. And in my opinion, this is one of those stocks where I don't think it slows down. Like, as soon as Coinbase breaks out of here at 355, I don't think you see 125, 340 again. Like, these types of accumulations where it's so massive, we tend to never return again. Best example I can show you is 2010, I believe it was. You guys can see that I've actually drawn this out on almost every chart. Liquidity, 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 sure. But back in the dot-com bubble, Microsoft consolidated for damn near 15 years. Swept liquidity. That's when we knew it was time to go, when price broke through this support. Shake off retail investors, buy more shares for institutional traders and investors. Push the price up. Very, very common tactic. But overall, you can see how long we consolidated for. And notice price never returned back here. On Coinbase, we do the exact same thing. So my humble opinion, once price breaks out of Coinbase, never returning back here. Never. And that's what sort of makes it undervalued to me. It's just the fact that we have so much potential. So much potential. And we just might never see 355 again. Ever. There's not really much more I can break down. Like, you guys can see the cumulative pattern. Left shoulder. Right shoulder. Here is your head. Even if I delete this, this is technically the neckline. And on an accumulative pattern as such that is so big, comes with force, man. I just showed you guys Microsoft. So personally, I would be buying the hell out of Coinbase. The hell out of it. The next stock that I can show you guys is Pepsi. Currently, we're not really doing much on Pepsi to indicate that we're ready to trade higher, but that is fine with me. Absolutely fine. We're currently trading off of these support levels down here. So technically, I should be scaling in, which I might start doing next week. But same thing with Apple and Adobe. Clear history of growth here on Pepsi. If I can locate my channel. So I guess this is the best that I can draw it out here. Median line respected. Buy line, sell line for support and resistance, both respected. And as you guys can see, Pepsi is just very, very, very closely approaching this buy line if it ever decides to hit it. Mind you, we can continue to trade higher and just buy more time and then hit off of this buy line in 2027, but we'll ultimately see what happens. But same exact thing, same exact liquidity model. Primary trend, secondary trend right here, and boom, price is most likely going to trade into these highs up here eventually, which would make this a 90% move. Because you have to expect all-time highs to get taken out, right? So this could be a potential 100% move from here. I love, absolutely love, strictly, sorry, I got a phone call. Sorry about that. I love, absolutely love just looking at beaten down blue chip stocks that people are like, oh, why would I invest in Pepsi? It's such a slow mover. Well, that's exactly why, because you want your portfolio to consist of solid stocks, and then you can take the gamble on riskier plays. But for me, this looks very beautiful on Pepsi. You just have to simply wait for that accumulative pattern to form. It's as simple as that. If it does decide to form. If not, yeah, we're continuing higher from here. But yeah, in a nutshell, these are the 5 assets that I personally think are still extremely undervalued that you guys can go and start buying for yourselves. Anyway, guys, if you guys found value in this video, make sure to hit that like and subscribe button. If you guys would like real-time analysis, real-time updates, and everything in between, trading courses, modules, teaching you guys how to do this on your own, make sure you guys hit that whop link in my description, and make sure to join the Elite Wealth Club. So with that being said, it was a pleasure making this video for you guys, and hopefully you guys do add some of these to the portfolio. Peace.